Hello everyone. Just a couple of months back, the whole world was talking about the Middle East. What will happen if the war escalates into a full-blown issue with everyone joining in? What happens if oil goes to 120 or even 150? What happens to economic growth? What happens to so many other countries waiting in the wings? Will there be a world war also? Cut to now, and all of this is not something we are talking about. Why? Because oil is below $80. The Middle East, the issue still continues, but it seems to be contained as of now. At the same time, inflation has been in control, and people are talking about rate cuts this year. That has given a fillip to our markets, and they have been on a roll. So that's how narrative changes overnight. And that's for you what's happened in the last couple of months. So what's now for the Indian markets? Will they continue to go up? Given that they are now trading at more than 20 times 1 year forward, valuations are certainly not very cheap. Valuations are not very fair either. They are in the higher than fair value zone. But they are currently not in the bubble zone where you can say it is an absolute sell. Well, can it get into that absolute sell zone? It can if the market moves up another 20% in the next 6 months or so. It would be easy to say that they are now in the bubble zone. Because for markets to keep going up, it also needs earning support. Earning support is there where in the last 2-3 years, India has not disappointed on earnings. But at the same time, expectations of earnings even going forward is mid-teens. Unless those earning expectations move up, and the market actually delivers that earnings, it will be difficult for the market to continue to hold on to those kind of valuations. Hence, markets from time to time will need to time correct, or even at time need some pullbacks. Well, even for that, they would need reasons. But let's not forget, macro changes overnight. Just as crude fell from 9500 to about below 80, just as inflation is down, just as the whole Middle East issue currently is in control, all of this can also change overnight. So what we should do is wait for any of such things to happen, markets to correct some, or markets to time correct before we take big positions again. It does not in any way mean that we are negative equities, or we mean that equities should be sold and something else should be bought. All we are saying is, it is right now not the time to put big money into equities in a lump sum way. That's because markets have run up, valuations are expensive. Now you have to let the good macro seep into micro, which is earnings, to be delivered for the markets to keep going up. Of course, if earnings keep going up, so will markets. And the value that you want to ascribe to the markets will keep differing depending upon your macro view and the view on how our country progresses. The current view is that the current government comes back. That will probably give the continuity that the markets is looking at. But the markets are always forward-looking. A lot of this is already expected after the state elections that the current government is likely to come. So in the next 3 to 6 months, you actually might see markets going up and then flattening out after the event actually plays out. If that doesn't happen, and the markets fall a little bit or time correct, then it again opens up a 15-20% upside going into next year. That's how we would like to play markets going ahead. Thank you.